Hey, what's up guys? White House would like to pass a stimulus package of $6 trillion to save this economy. In this video, I will try to explain what those $6 trillion mean for our economy and why we might witness the biggest economic recession in the history. I don't want to say that they want to stimulate our economy. I think it is wiser to say that they would like to save our economy from further declines. Will they succeed? To be honest, I kinda doubt it. I believe there are way more room to go to downside from here, considering the fact that majority of American people will not work. We will just stay home for a few more weeks or even months. If you look at the S&P 500, as of the time of this recording, it trades around $2,475 a share. New all-time high was reached a few weeks ago when S&P 500 tapped $3,400. Since then, it was in free fall. It dropped to the lowest point, which was on March 20th. The lowest price point was at around $2,200 a share. That's about 1,200 points down, or dropped 35% from top to bottom. 35% drop is no joke, especially in such a short period of time. Since then, S&P 500 was able to bounce back slightly while the White House announced a number of different stimulus packages for the last couple of days. S&P 500 rebounded to $2,500 a share, or approximately 12% increase. The reason stock market didn't fall any further just yet is because market got excited about this new $6 trillion package to save the economy. This is the biggest by far potential stimulus package in our history. Nothing comes near to what is about to happen. We can call it QE infinity. $2 trillion will go directly to assistance and another $4 trillion in Federal Reserve lending power to businesses.
That fund, by the way, will be overseen by an oversight board and an inspector general. It will be completely transparent. So the total package here comes to roughly $6 trillion, $2 trillion direct assistance, roughly $4 trillion in Federal Reserve lending power. Again, it will be the largest Main Street financial package in the history of the United States. Liquidity and cash for families, small business, individuals, unemployed, to keep this thing going. We're heading for a rough period, but it's only going to be weeks, we think. Weeks, months, not going to be years, that's for sure. And hopefully pave the way for continued economic recovery after this crisis.
Let's take a quick look what Fed's balance sheet looks like. What we can see here is Federal Reserve assets. The way they acquire assets is just by simply creating money out of the thin air. Then they buy different assets throughout the country. Currently, the total assets that Fed has is close to $4.7 trillion. In 2008 housing bubble and global financial crisis, Fed printed $1 trillion, which was QE1. Also, with the help of dropping interest rates to zero, they were able to stimulate another economic cycle. Now, I'm not quite sure how much trillions will be on the Fed's balance sheet after this package, but let's see. The number can easily reach double digits. Approximately 60% of total balance sheet assets comes from treasury bonds. 35% comes from mortgage-backed securities. Like 3% from repo market, and the remaining 2% comes from some other shit. Most likely, Fed will use those $4 trillion to buy treasuries and mortgage-backed securities. But you may probably think, what, they're going to buy treasuries bonds? They're just going to loan money to businesses. Well, what is the bond in the first place? A bond is essentially a loan where an agreement is made between lender and borrower that states the borrower will pay interest on the principal amount and then return the total amount at the set time. So essentially, through the primary dealers, the money will find its way at the back of the Fed's balance sheet. So then balance sheet can explode to over $8 trillion. This is crazy. Let's take a quick look what Anthony Pompliano thinks about this stimulus package.
Jesus, this is incredible. $6 trillion stimulus package is what they're saying is going to happen right now. I don't even understand how we got to this point so quickly. It seems like literally just a week ago, 2 weeks ago, people were talking about literally last Sunday, $700 billion quantitative easing plan. We're going to go buy $500 billion worth of treasuries, $200 billion worth of mortgage-backed securities. All of a sudden, this Sunday, there's word that there's a potential $2 trillion stimulus package coming down the pipe. And then out of nowhere, bam, $6 trillion stimulus plan being floated. As I've been saying over and over again for weeks now, it had to be $5 trillion or more. It looks like they're going to go to $6 trillion. And I think that part of the crazy part of this is, remember, last week, the Fed's balance sheet went up $356 billion. It's the most increase in a single week ever. It went all the way up to $4.6 trillion. And so by adding another $6 trillion, that would bring the Fed's balance sheet to $10.6 trillion. Think about this for a second. $10 trillion. We say these numbers like they don't even matter anymore, but $10 trillion. We're going to more than double the Fed's balance sheet. And it's because they have to do it. This problem, this economic slowdown is way bigger than anyone originally thought, right? And when people were saying $700 billion was a lot, and then $2 trillion was a lot, I kept saying it's got to be $5 trillion or more. It's got to be $5 trillion or more. $6 trillion is a big, big, big number. And it looks like that's going to be some through lending power and then also some through injecting actual liquidity into the market. Just absolutely nuts what we're seeing right now. Completely unprecedented. Rates down to zero. 2 emergency cuts between meetings. And now we're talking about a $6 trillion stimulus plan that would double, more than double, the Fed's balance sheet, right? This system is broken, and they have to do this to fix it. It is a horrible long-term decision. Horrible long-term decision. But it's absolutely needed to fix the issue in the short term. We're talking about potentially having 10 plus million Americans out of work in a 30 to 45 day period, right? Unemployment before this whole thing happened at the end of February was 3.5%. About 5.8 million Americans were unemployed. All of a sudden, we're talking about potentially having 15 plus million Americans unemployed in the United States. The only way that they can solve this problem is by coming with trillions of dollars. $6 trillion is the number right now. It's not finalized yet. It would not surprise me if it went up even more from there. We went from $700 billion last Sunday to $2 trillion was the number they were floating around this Sunday. 48 hours later, we're now talking about $6 trillion. It's tripled in 48 hours. And on top of all of this, the proposals that are floating around as to why this has not been passed yet, there's all kinds of garbage that's being thrown in these bills. $100 billion for NASA. I saw $25 million for cleaning supplies in for the Capitol building. Literally, we have people who are arguing over how much money is going to go into cleaning supplies for the Capitol building instead of getting American businesses and entrepreneurs and employees the help they need immediately. Right? We're talking about getting money to museums and all this other nonsense and pork that they're throwing in these bills, but they can't get a deal done. The longer they wait, the worse the situation gets and the bigger the stimulus number gets. So $700 billion last Sunday, $2 trillion was the number this Sunday. We're now at $6 trillion. If they don't get a deal done by the end of this week, by Friday, we may see $10 trillion be the number. That's how quickly this situation is deteriorating. Most of the people in this live chat are sitting their asses at home. American economy has ground to a halt. If you walk down the street in New York City right now, there's 50, 60, 75+% of the places are closed. It's not just people aren't spending money. There's nobody at work. There's nobody earning a living. We've completely shut down the economy. And so $6 trillion, again, if we wait till the end of the week, may not be enough then either. This is absolute insanity, and they have to do it. From a game theory standpoint, they have to do this. So as much as we don't like it long term, it's the only thing that's going to solve the short term problem, and they have to hurry up.
Currently, we are in deflationary state. After all this is over, it might take few weeks or even few months. We will see a recovery and US dollar will continue to depreciate in value. However, FDIC, which stands for Federal Deposit Insurance Corporation, that insures your money while you keep them in the bank, says that you should keep your money in the bank. Let's take a quick look.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
The main reason why they don't want you to withdraw your money is to avoid any bank run, as Fed is about to inject trillions into the system. She also said that you should not keep your money in the mattress, but rather in the bank. Well, why should you keep your money in the bank? There is no financial incentive to keep your money there. Interest rates is at zero and inflation is about to skyrocket. There is another most important reason not to keep your money in the bank. Before all this chaos happened, when you deposit your money in the bank is required to keep 10% of your money while they can lend out other 90%. And now they eliminated that requirement. They do not have to keep any deposits on the book to lend out your money, which creates a very fragile environment when people would like to pull their money back. Another thing that I would like to talk about right now is unemployment. The most vulnerable industries that are impacted by this outbreak is definitely food and beverage services, as all bars and restaurants closed. The retail is probably on second place, as people do not even think about buying clothing. They are just running after toilet papers and hand sanitizers. Real estate is impacted the least, as people do indeed need to live somewhere. The unemployment surge is so large, there is basically no way to forecast what's next for this economy, since we have never seen a layoff occurs at this pace in the past. It's a scary situation that underscores the extent into which this recession is not the same as 2008 housing bubble, it might be even worse. Some estimates predict near catastrophic level of unemployment. St. Louis Fed President James Bullard estimates the unemployment rate could soar 30% in the second quarter of this year. Unemployment claims that Goldman Sachs predicts is unprecedented. They predicting 2.25 million claims. To put this in perspective, in 2008 global financial crisis and housing bubble, unemployment claims was around 650,000. In 2000's dot-com bubble, it was below 500,000. Current projection is 3 to 4 times larger than those previous recessions, so we might enter into even depression. So I definitely expect a stock market to drop even lower. Let me know what do you guys think about this situation with Fed printing $6 trillion and current unemployment rate. Leave your thoughts in the comment section below, hit that like button and subscribe.